Let's get some insights to the news shaping the markets. For that, we welcome in Rebecca Walser is here, President, Walser Wealth Management. So glad you're here in person.
Yes,
thank you so much. I know the last couple of times you've been on, you've been sort of giving this word of caution to the tune of a big percentage pullback. Are you still on that feeling at this moment?
Yeah, and it's really hard to be on that side, right, Nicole? Because with the Trump bump, with the expectation, with foreign leaders flying from Canada to meet with him in Mar-a-Lago, from the Eurozone saying, hey, we're going to buy gas from the United States instead of Russia, all of these things coming together really makes this market really optimistic. And I am optimistic as well, Nicole, but the truth is we do have massive problems in Asia, specifically China and Japan, with the yen and the carry trade situation. So that is still a weakness. And then you look at the Eurozone and they're projecting only maybe 2% growth, and specifically Germany in a manufacturing crisis with no affordable energy, with everything that happened with the Nord Stream pipeline and all of those things. So when you look at all of these things together, Nicole, you see that global demand will pull back. And as that happens, and even if Trump does actually leverage the tariffs, that's going to make the rest of the world, again, more difficult for the United States. And so we are going to be the reciprocant of a global slowdown. And so, yes, we still are very cautiously optimistic.
And energy demand coming down, to your point, in your opinion, and OPEC actually delaying, delaying the phase out of the production cuts. So that's interesting, too. Right now, we're seeing oil today below $70 a barrel. So what kind of pullback and volatility? I mean, you were saying 30%. Are you still on the 30%? Right now, we're seeing 6,078 on the S&P. Tell me what kind of percentages, or when would you step in and buy, or what kind of volatility are you really expecting? Because if you say that, that's a big number.
It's a huge number, Nicole, and I don't want to scare people, but I just have to fight back against all this, I would say, irrational exuberance. I would say we're going back to a .com exuberance before the monetization and e-commerce actually existed. We had the internet, we had pets.com worth $1 billion before they had sold their first bag of dog food. This is the same as the AI that we're seeing now. Now, AI, just like the internet came to fruition and e-commerce became a main thing and changed everything about everything, that is the same as AI, but it's not yet monetizable. It's not yet implementable. I mean, besides ChatGPT and helping you write some emails and text messages, how is the average person using AI? Does that mean it's not coming? No. It is coming, but it is not yet monetized. It's not usable. If you ask corporations why they're investing so much R&D in AI, it's because our competitors are doing it. They're starting to see price improvements. They're starting to see staff reductions, but then job cuts will come with that. So there's a lot of stuff that's going to be worked out through AI.
And we'll get a jobs report
this is
Friday.
The irrational exuberance, Nicole. And if you see, look at the jobs claims, 224. We weren't expecting it. Look at the ADP yesterday, 148. It was a little bit of a miss. So you're starting to see a little bit of labor softening, and that makes Powell more concerned.
Yeah, and that's one of his mandates, right? And that was something he was concerned about on over the last few months. At first, and then it went away, and then it sort of reappeared. And we'll get the non-farm payrolls on Friday. So the pullback, and I want to get to commodities because that's an area that you think might be a good play. For the pullback, 10%, 20%, 30%, what would you say?
So I don't think this is a normal pullback. This isn't just a correction. This is absolutely a realization that the world is slowing down and that Trump isn't going to fix all of that just by getting reelected. And then you're going to see that, okay, we have overestimated the monetization of AI. So we are going to see, I think we're still going to be in that 30% range or higher. And that's why we're still cautioning investors. This is a top. We just had another 56 highest yesterday on the S&P. The 56 high
of
you know
the
what
year.
I'm saying? Of the year. 56 high of the year. That's crazy, Nicole. 56 high of the year, 2024. Based on what? Just based on AI. And AI is real, but it is not yet monetized.
Let's talk about what you think could work. You think commodities might be a play, right? Is that for 2025? Is that dollar cost averaging? Get in now? What are you thinking here?
The
what kind of commodities?
Play, specifically gold, silver, and things like that. Real, true, hard asset money.
Valuable metals.
When you see Trump tweeting out that the BRICS nations must immediately stop any move towards an alternative currency. When you see Xi Jinping of China retaliating and saying, no, this is going to backfire on you, and starting to to say now we're going to ban imports to the United States that they need for military defense weapons. When you see those kinds of things, Nicole, you realize, yes, Trump is going to have some success, but he's also going to have some pushback, especially from China.
Right.
They control our pharmaceutical industry with the ingredients. They control a lot of military defense spending. So Trump has got to realize that there's going to be offsets to what he does. And BRICS is moving towards a new currency situation, a new way to transact amongst their members without and outside of the U.S. dollar. So when you realize we've gone from unipolarity to multipolarity, that's when you see these kinds of big currency changes happening.
I do wonder how long that would take to actually formulate and put together.
Well,
because some of the experts I've spoken with don't feel like it's actually feasible right now.
Well, they don't know how the Enbridge is operating. They don't know the functionality that the Enbridge already has. There's a reason that Russia, when they mentioned the Enbridge, when they had their symposium for BRICS in October in Russia, Putin basically said about the Enbridge, and all of a sudden the Bank of International Settlements came out and said, we're going to transfer the Enbridge project to China. We do not want to be involved anymore, because the functionality of them to cross-transact and transactions is there, Nicole.
Okay. What about other things? I mean, what about the vibe of like IPOs, M&A activity?
I think you're seeing it all pick up.
Technology.
All of it is all positive, because this Trump effect really does give CEOs a reason to hope that we're not going to have unrealized capital gains tax like we would have had if the other regime had won.
Right.
We're not. So a lot of CEOs have a lot of reasons to be positive, but still we're going to face that global headwind.
How about this? How about, so if you're expecting a pullback, let's say 30%, you said it could be more, it could be,
Absolutely.
volatility. What if you just ride it out? What if you don't do anything? You don't sell at the lows, then you really lost money. I don't know if you say to buy. I mean, you talked about metals being a good place to go.
Yes, absolutely.
But what if you just ride it out for a year or two and do nothing with the portfolio and leave it the way it is? Is that the advice?
So the advice to hold and go long like that would be, if you have a long window and you don't need this to be realizable in the next 60 months, then yeah, I think you can go really long, and I think AI in the long run will come back. But if we have the kind of global macroeconomic change that I'm expecting, Nicole, then no, this is not going to be a short-term thing, and if you need those funds within 60 months, you don't want to maybe take that risk. You would maybe take profits, be on the sidelines, or be in some commodities.
And there are people who are nervous.
They are nervous because
particularly some older folks that I speak to, I mean, they're worried.
We have the top of the top of the top, and yet we have global slowdown, and we have energy crisis, and we have new currencies coming, and we have new ways of transacting business. So all of these unknowns, and yet we're at the top of the top of the top, and people are still saying buy in. So I say dry powder, take some profits, and I think you're going to have more. We're going to absolutely have more clarity, Nicole, between now and January 20. A lot of things are going to happen between now and January 20.
Okay, a lot to watch for. Rebecca Walser. Always great to have Rebecca on. Rebecca Walser of Walser Wealth Management. Thank you.